Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, March 17th. Happy St. Patty's Day. It is 5:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in a moderate correction, which we quantify as being between 8 to 12% off the highs in the S&P 500. Actually poked a little bit less than 8% off of the highs today. Check the trend gauge over here. Market leaders, red arrow, but little call it green shoots with a yellow sub arrow as some potential leaders are raising their hand saying, look at me. Will it continue? The overall market will have a lot to say about that. We're seeing divergence between the equal weight S&P 500 and the market cap weighted S&P 500 as the big tech names continue to lag. So, and then the three time frames that we track the indexes across: short-term 21-day moving average and medium-term 50-day moving average. All indexes still below those levels, thus the red arrows. And long term, we've got the yellow arrow there. We never got significantly below that 3% envelope I've been talking about, kind of a 3% range below the 200-day moving average, that the market bounces around that level sometimes before reclaiming. It's when you get significantly below that level that things could be getting worse. And the equal weight S&P poked its head above the 200-day moving average today before fading a little bit into the close. So we've got the yellow arrow there, the red sub arrow, but some strength in RSP, the equal weighted S&P, as I mentioned, something we'll be keeping a close eye on the rest of this week. So what happened today after a very harsh sell-off with very little in the way of a bounce? We've got the second day of a broad bounce, and as I mentioned, some potential leaders making themselves known. Here are the numbers: a 21 over 21 list. 21 over 21 list is back. It's been under construction for 3 weeks as there were no leaders. But as I said, we've got some to take a look at, and I'll go through that list today. 19 up, 2 down on that list. The big eight, here's where the problems start. Down in averages 0.64%, led to the downside by Tesla, down 4.8%, Netflix up 3.5%. The RG8, our 8 growth ETF composite, another good sign for potential leadership. All 8 of them up, an average of 1.49%. S&P 500, we opened mildly lower across the board on the indexes. Put in a low right away, rallied, based a little bit of a fade into the close. S&P up 0.6%, pulled back that last 15 minutes from being up 1%. Equal weight, so breadth was good. Equal weight was up 1.35%. Take a look at the rest of these numbers. When we get to the charts of the indexes, Global 60/40 up 0.68%. Our flagship GROTECTION portfolio, still heavily in cash and money markets, up 0.21%. And I've got a little graphic here that we'll be taking a look at while we look at the indexes today. So it's 7 steps from a bottom to a bull. And these are really the concepts that we talk about all the time on here, as far as the way we want the moving averages to be configured relative to their price. And you could really apply this to any stock as well. The leading stocks will be acting better. They'll have more of these steps checked off. Some never got below the 200-day moving average, obviously. So the steps can be in a different order. But for now, we'll talk about the S&P 500, which I'm going to show right here. So S&P 500, we bottomed on Thursday right above the 5,500 level. First day of any significant bounce was Friday, nice green day. And then the first thing that we want to look at is getting above the declining 8-day exponential moving average, which has been containing this move down for the last 2 weeks. Early in the day, we ran into that level and faded. We thought it was just going to be another failed attempt at any move higher, but late in the early in the afternoon, we trended higher, got above it, pulled back a little bit into the close, but closed above it. And there's nothing magic about it. It's a reference point, and the day that you recapture a bullish reference point, you take note of the lows of that day, and you want to stay above the lows of that day in order for any change of character to continue in the market. In this case, obviously, we're looking for a change of character from negative to positive, and step one is regaining the 8 day moving average. Next step will be above there is the 200-day moving average. We are 1.2% below that level. We get through there. We'll meet up soon enough with the 21-day moving average. Then we'll want the 21, the 8 will want the shortest moving average that we track, cross up through the 21. That will put the slopes of both of those lines higher. Next step over that would be the 21-day moving average meeting the 50-day moving average. We want that to be back above there. And then, of course, price regaining the 50-day moving average, and then the slope of the 50-day moving average turning positive. That would put the 8 above the 21, above the 50, above the 200, price above all of them, and the slopes of the lines all positively configured. So it won't happen overnight. Bottoms are a process. We didn't get a massive collapse to get everybody out, although this was a pretty harsh move down, one of the 5 or 6 quickest in history for a 10% correction. So it makes sense that the bounce off of that correction should be fairly strong from a price percent. And we've seen that with a 2 day bounce now, but a lot more work to be done. But as I said, that's the negative. On the positive, one step down, regaining the 8 EMA and leaders. That's not even included in the steps, but it goes without saying that we need leadership to come to the fore, liquid stocks that institutions can sink their teeth into and drive a rally higher. So that's the S&P 500. Next, the NASDAQ 100, which also ran into the 8 early in the day. Let's go back to the S&P so I can talk about that action intraday. So put in the low right away, based for about 4 hours, and then in the afternoon was that trend higher, breaking back above. Here's where we failed at the 8 day moving average, got back below it, but never broke the low of the morning or the open. Uh, Nice trend up for about 90 minutes in the afternoon, sideways, and a little bit of a fade into the close to give the bears something to hang their hat on. Never easy. NASDAQ 100 basically with the same pattern, and it lagged. It was there was some strength late. It was really lagging the S&P 500 at the lows of the day around lunchtime and late in the morning, but uh, the pedal went down in the afternoon, and that powered the S&P and the NASDAQ uh, to the gains that they showed. A little bit of a flag into the close, and then the late 15-minute fade showed up there as well. Let's look at the equal weight S&P 500, up 1.35%, cleared above the 8 day moving average, briefly above the 200-day moving average before that late fade as well. Not as harsh as on the market cap weighted index. Let's go to the Dow. Dow ran into the 200-day moving average and pulled back as well, which is right at that 42,000 level, which provided support several times during the pullback before finally giving way last week. On to mid caps now. Mid cap 400. We really need to get some leadership out of these types of names. Mid cap is like the incubator for the next large cap leaders. Nice day today, up 1.5% above the 8 EMA. The 21, this is the mid caps and small caps have really lagged on this pullback. You can see the 21-day moving average below the 200-day moving average. That's not the case with the big cap indexes. And that's the next point that the S&P 400 is going to run into. And then, of course, the lows of today, critical on day two. There's actually the possibility that the NASDAQ could have had a follow-through day because by a couple of pennies, it didn't undercut the lows of last Tuesday. on Thursday, but ended up only up 0.31% and on lighter volume. Finally, let's go to the Russell 2000. A nice bounce as well, up 1.19%, clearing the 8 EMA. It will also run into the declining 21-day moving average next. Those are the five major indexes. Onto the VIX, pulling back today, back below the 21-day moving average. So VIX pulling back along with the indexes bouncing. So negative correlation sticking in place there. Let's go to the US dollar. Continues to be weak, down just a smidge today. On to precious metals. GLD up 0.5%, continues to make higher highs. SLV up 0.33%, 3 days of a tight close there. GDX, the gold stocks, continuing to act well, making a higher high after breaking out of a cup and handle base. And Bitcoin, tight action, still lagging below the 21 and declining 50-day moving averages. On to bonds now, broad bond index. Not a lot of volatility in bonds today. Broad bond index up slightly, TLT up slightly more, although closing toward the bottom of the range. And with price being up, that means that the yields were down slightly. There's the yield on the 30-year and finally the yield on the 10-year, also down. That's our inter-asset correlation chart section. Let's go to the tail of the tape, and there's some good news and a little bit of bad news in here, and it depends on what time frame you're looking at. So the stochastic, all six stochastics on the five major indexes plus the equal weight S&P, they all turned up from oversold. So they did the cross. They're not off of oversold yet, but this gives them room to rally. Same situation with the RG8, the stochastic of all eight of them, crossing higher from oversold. NASI, this is McClellan Summation Index, trying to turn from oversold. It's about neutral right now. So those three being oversold give the market room to run to the upside. Dollar weakness continues. Yields continue pulling back, but just in 2 days, the percent of stocks above the 5-day moving average went from below 20 to right around 90, that's why we've got the up arrow in red. That's actually a negative for the market. So the best way for this to resolve would be a mild pullback in the S&P 500 over the next couple of days, getting this percent against the 5-day back around maybe the 70, 60, 50, 40-ish level. Not oversold to or not overbought too much, because it's very clear on the chart when you look at it. When it gets to the top, you see a pullback. When it gets very near the bottom, which we pointed out last week, you often get a pop. We got the pop for 2 days. That moved 89% of those names above their 5-day moving average. And as I mean, that's strength. 2 days of strength, but it's also 2 days of a bounce. And you need more than that. And you don't want to go straight up either. We need to see a little bit of backing and filling, get some lower risk entry points on some of these names that have gone straight up for 2 days. We talked about the VIX. Fear and greed is at a 22. AAII, the bulls are firmly in control. Or sorry, the bears are firmly in control there, which is a contrarian bullish signal. Some news today: retail sales and Empire State Manufacturing well below expectations, and the market is actually going up on bad news now. The futures improved overnight when those numbers came out. Wednesday, FOMC, 99% chance of no interest rate cut. Onto the keys to today. We're monitoring the Nasdaq and the S&P against the 200-day moving average, still below on both of them. RSP, however, also against the 200-day moving average, poked its head above. SPX stocks percent against the 5-day, already mentioned that, extended very quickly. And leaders, how'd they do? Well, the RG8, 8 out of 8 of them were up, and we've got a pretty bullish looking 21 over 21 list, which we'll show momentarily. So a little bit of mixed signals there, but better than a sharp stick in the eye, let's say that. Day count from up 1 to up 2. We closed above the 8-day exponential moving average, and the slope barely hooked up on the S&P, so we're marking that as sideways. Still 17 days down below the 21-day moving average, and that keeps our expectations negative. until we're back above the 21 on both the S&P 500 and NASDAQ 100. Sectors today, all 11 of the spider sectors higher, led by semiconductor, software, and oils. To the downside, just yields and the dollar. No real weak sectors. XLY, communication services, the weakest of the 11 spider sectors that were up. No portfolio changes today, leaving our adjusted beta at 0.31. That's basically comprised of 20% long the S&P 500, 5% long silver, 5% long gold, 2% long TGTX. We've got a lot of names that are looking pretty good that we're keeping an eye on, but we need to see some more confirmation. To the downside, our balance at risk, 1.38%. No changes to the portfolio. Bottom line for the day. Day two of the broad bounce, potential leaders emerging. Keys for Tuesday. S&P against the 200, NASDAQ against the 200. I'm going to add in here equal weight S&P. We'll call that RSP because that's the ticker. RSP against the 200-day moving average. And we'll see how these keys turn tomorrow. We'll also keep an eye on that S&P percent above the 5-day, and we're going to get some continuing good action out of leaders. Those are the 5 keys we'll update in tomorrow's video. So let's go to the 21 over 21 list. We own a couple of these either in GROTECTION or TurboTection. Basically, this is a team effort result of we've been looking at about 100 stocks that had either potential to lead from a fundamental standpoint, they've got the N standpoint, or they've been holding up. And we scored all of these, and these 21 came out with the best composite scores of the Revere team. So Okta, acting great since its earnings report, had a day two higher high, a mild pullback to the 8-day moving average, and now back to the pivot of the flat base. Absolutely nothing wrong with this. Doesn't even look like there's any kind of a correction going on in the market. And this is what we need to see more of, is stocks emerging from bases. Mostly what we're seeing is stocks coming off a bottom and reclaiming the 21-day moving average. And you'll see this as we go through the list. BABA, China, obviously the other leadership area to look in with stocks. This making a high, holding above the 21-day moving average. This emerged as a leader back in early February. Massive relative strength on Chinese names. Spotify, 5 strong days up after the selling dissipated below the 50-day moving average, right into that 600 level, reclaiming the 21. This is what I'm talking about. This is a V-shaped bottom, which we really don't like to see. We need some sideways action to work that off and have it hold the 21-day moving average, have the 8 come up through the 21. Don't want to go too far too fast on these, but this is very clearly at the top of our list to buy. KWeb, re-breaking out of this cup and handle after pulling back and bouncing off the 21. This is basically big China internet stocks. Silver, with the breakout of the very nice looking cup and handle and relative strength, tight for 3 days. TGTX, this is the lone individual name that we own in GROTECTION. Nice. It was weak early, closed strong, holding that 40 level on the pullback. SE regained the 21-day moving average today. There's another reason, another thing that we're looking for in these names that are potential leaders is they had a positive reaction to their last earnings report, but were then held back like basketballs underwater because of what the overall market was doing. So we're watching some of these regain their strength the last couple of days. GDX continuing its breakout. And GLD. So we've got gold stocks, and silver on here. That's basically the same sector, precious metals, but we didn't put any individual names on here. PAAS looks good. AEM looks good. There's quite a few of them that look good. But we're sticking with the ETF GDX, and we own it through Nugget in TurboTection. Lemonade, that cool, refreshing drink. If you remember the Eddie Murray imitating Elvis from his stand-up from decades ago. Lemonade looking good, nice tape consolidation, and regaining the 50 and 21 day moving averages today. WGS is a biotech mild volume pullback today after an earnings gap up 3 weeks ago. Yum China, we're trying to limit the Chinese names. We could have more of them on here. We're sticking to K-Web, Baba, and Yum China. Futu could have been on here as well, but I crossed it off. I don't want to get too much in here, and it's hard to trust China. But honestly, the money is flowing into it, and we'd be foolish to not acknowledge that. Fez, this is the Eurostox 50. Europe has been outperforming the US this year with the uncertainty of the economy in the US, with Trump remaking the economy. Fez, Eurostox 50 bounced off the 21-day moving average, 2 nice days up. So we had 2 nice days up in the US. We had 2 nice days up in Europe. That tells me that the money did not flow from Europe back into the United States. One possibility that we're seeing is money's flowing out of those big eight liquid names, the big eight, not Netflix, but the rest of them don't look very strong. And it's flowing into China, into Europe. That's thesis that we're working under, and appears that it's showing. That's what the charts are showing anyway. Rubric gapped up on Friday on earnings, pulled back, held the 50-day today, closed higher. Very nice action. And another one with a harsh move down along with the market, trying to mitigate that with a positive earnings report. And we've also got OKTA in the same sector that's also acting well. Here's BJ's reacted strong on earnings, pulled back to the 21 and bounced. DoorDash regaining the 21 today. This had a very nice move over the past 9 months. Pulled back, not really damaging the chart. Normal pullback, regaining the 21 today. Very nice fundamental earnings and sales growth numbers. Nutanix, we own this when it gapped 2 weeks ago, gapped out of this base. The market held it back. Harsh sell off for 4 days. It collected itself, regained the 21 today. Definite fundamental leadership qualities as well. John Deere regaining the 21 today. This has some sort of an AI component to really maximizing the use of the tractors and the machinery that they use, that's making farmers quite a bit more efficient. And we did a little bit of reading on that. And so that one is on the list. MP Materials, this is rare earth metals, below our $100 million threshold slightly, but you can't argue with the chart and the accumulation and the relative strength. Palantir closing right on the 21 today. Another big move up on earnings, harsh selling as hedge funds exited. And it's got the leadership, like the CEO, and it's got the fundamental leadership as well. And finally, Antero Resources, relative strength, new high. Oils had a good day across the board today, regained the 21 on Friday, cleared the 50-day today. A little bit of a V bounce here. Has also oil spiking on geopolitical fears with Iran and the Houthis over in the Red Sea. And that's something else to keep an eye on. But the bottom line is we very easily have 21 potential leaders. Had another 21 that were candidates that just didn't quite make the cut. So something to keep an eye on. We're not saying it's a bottom. We're saying the only thing we can say for a fact is that we're 2 days off the bottom, and we have checked one of the 7 boxes that we need to go from a bottom to a bull market, at least from the way the S&P 500 and NASDAQ 100 and RSP look. And then, of course, there's varying degrees of strength or weakness in individual names. But checking one of the 7 boxes today, we'll see what tomorrow brings. St. Patty's Day, green was the color. Both in celebrating and in the market today. And with that, I'm going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. Our flagship portfolio named GROTECTION, dual mandate, grow assets during uptrends, protect them as the market starts to pull back. Full-fledged downtrend, our rules will have us out of the way. Anybody that was a client can confirm how we lost significantly less than the market in during the 2022 bear, during the 2020 COVID, and even in the 2018 fourth quarter bear market. And if you think this is a common sense approach, which we do, what other part of your life when it goes bad do you not change things? That's how we treat our client portfolios. Because as technicians, we know the difference between a healthy market and a risky market. Under the 200-day moving average is where risk picks up. That's why we've gone so cash heavy. Right now, I've got a 2-day bounce off the bottom, regain the 8-day exponential moving average. We'll see what happens when we come into the rest of this declining moving average resistance. And that'll wrap it for Monday, March 17th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Reveritas, Revere Market Truth. Thanks for listening and have a great day.